Good morning. What's going on, everyone? We have a pretty important approval out of FINRA today surrounding security based swaps. This is SR FINRA 2021 008. Now, this was filed on January 6th. It's a self regulatory organization approval of a proposed rule change as modified by Amendment Number 1 relating to security based swaps. This will be scheduled for public release tomorrow, 1/12/2022. And the main points of this one, let's go ahead and take a look. In light of the Commission's October 6th, 2021 registration compliance date, FINRA proposed in April 2021 to amend FINRA Rules 0180, 4120, 4210, 4220, 4240, and 9610 to clarify the application of FINRA rules to members' SBS activities after the Commission's registration compliance date. These proposed amendments would, number 1, adopt a permanent FINRA Rule 0180 to replace the temporary rule set to expire on February 6, 2022. Number 2, to amend FINRA's financial responsibility and operational rules to conform to the sex amendments to its capital, margin, and segregation requirements for SBSDs and broker-dealers, and to otherwise take into account members' SBS activities. So basically, SBS activities have not been taken into account. So basically what they're doing is they're adding it into the SEC law now, which is pretty big. Now, the problem is FINRA is basically supervisory administrator in this, so they have all the authority in this, which is the problem because FINRA is crime. Number 3, adopt a new margin rule specifically applicable to SBS, replacing the expiring interim pilot program establishing margin requirements for CDS. And amend Rule 9610 to permit FINRA to exempt members from Rule 0180 under the process set forth in FINRA's Rule 9600 series, Procedures for Exemptions. Now, point number 4, as you can imagine, is the majority of the filing. So let's look at Part B here, Proposed Rule 0180, which is application of FINRA rules to security-based swaps. Proposed Rule 0180A would provide that FINRA rules generally apply to members' SBS activities unless otherwise specifically accepted. This would reverse the presumption of the applicability of FINRA members and rules for members' SBS activities in the current expiring temporary Rule 0180, which generally does not apply FINRA rules unless otherwise specified. Proposed Rule 0180, paragraphs B through G, would then specify the exceptions from the general presumption of applicability of FINRA rules in Proposed Rule 0180A. These proposed exceptions fall into 3 general categories. Number 1, general exceptions based on impracticability or operational burdens. 2, exceptions for SBS entities already registered with the Commission and associated persons of SBS entities. And 3, exceptions in connection with the conditions to the sex cross-border SBS counting exception. Proposed FINRA Rule 0180I would further authorize FINRA to exempt a person from the application of specific FINRA rules to SBS on a case-by-case basis, pursuant to the existing procedural framework set forth in the FINRA Rule 9600 series, and as FINRA deems appropriate consistent with the protection of investors and the public interest. So exceptions to the rule. The remainder of the filing, the majority of it is based on this and how they're changing their capital requirements. Basically, proposed Rule 0180B would provide that the following FINRA rules shall not apply to members' activities and positions with respect to SBS. Number 1, Rule 6000 series, quotation, order, and transaction reporting facilities. Oh, great. Number 2, the Rule 7000 series, clearing transaction and order data requirements and facility charges. And 3, the Rule 11,000 series, the Uniform Practice Code, or UPC. The Rule 6000 and 7000 series include rules relating to trading, quoting, clearing, and reporting for securities other than SBS, and therefore are not applicable to SBS. Maybe you should think about adding them, FINRA. Jesus Christ. Proposed FINRA Rule 0180F would provide an exception from FINRA Rule 2231 in the limited circumstances where the member is acting in its capacity as an SBS entity and the account holds solely SBS and collateral posted as margin in connection with such SBS. These SEC rules generally require SBS entities to obtain and keep records, generally, of certain information in connection with their SBS accounts, including SBS-specific identifying information. FINRA believes that, while not identical to FINRA Rule 4512, the SEC rules serve analogous purposes and that also applying FINRA Rule 4512 to SBS only accounts would be duplicative. Accordingly, in order to promote regulatory clarity and avoid unnecessary duplication, FINRA believes it is appropriate to provide an exception from FINRA Rule 4512 in the limited circumstances where the member is acting in its capacity as an SBS entity and the account solely holds SBS and collateral posted as margin in connection with such SBS. That's very specific. It's like they're telling them how to get away with it. Okay, proposed rule 0180I, authority to grant exemptions from the applicable or from the application of rule 0180 upon member application, and 9610, application for exemptive relief. Basically, more crime. They're providing all this relief, all these exceptions. It says FINRA believes it is appropriate in the public interest before, they rattle off all these exemptions. And it's kind of frustrating to read because, it starts out good, but then, all these exemptions apply. So basically, I don't know. I mean, to me, it seems like they're trying to tell them how to get away with it. So I'll link this below if you want to take a further read, but those were the main points. Basically, increasing capital requirements for SBS entities, providing a plethora of exceptions for these entities, and then these three here. The rules to adopt the permanent rule, which again is set to expire on February 6th. So I assume this will be approved or implemented somewhere around there. So anyways, that's 008. Let's get a 2022 filing. I'm ready. Come on, hit me, daddy.